Well, it's a tug of war in the ag commodity markets here this morning. I'm Marlin Bohling with you, and I want to take a look at our quotes provided by Bar Chart on the grain markets. Let's start with the corn, shall we? And on the corn board, we are maintaining double-digit gains across that board. They are backing off just a little bit from what we had earlier. September corn now 13 1/4 higher at 617 1/2. It has given back about 6 cents from its earlier high. December now 12 1/2 cents higher on the day. Switching over now to the soybeans. Here we go with the August contract, 39 3/4 higher at 1505 3/4. We have November new crop soybeans 44 3/4 higher. It's at 1387. Well, let's move on to the wheat market and see what it's up to here today. So far in Chicago, September wheat, try this on for size, 41 3/4 higher at 818 1/2. Haven't had moves like that to the upside for a while. Meanwhile, in the Kansas City market today, you have September 39 3/4 higher at 877 1/4 after a low of 836 3/4. What a range. And in spring wheat in Minneapolis, September 40 3/4 cents higher at 947 1/2. And we had a low below $9, 897 3/4. Now we're about a $0.50 off of that already here this morning. Big volatility in the markets here, and to talk about it, we have the one and only Chris Swift with us in the studio. He comes from just down the street a ways, and that is Swift Trading in Nashville. Thanks for coming in.
Absolutely.
Appreciate that very much.
Yes, sir.
So for a change, we don't have to talk about the markets just falling off a cliff today.
Right.
Today they're like going straight up the cliff.
Mm-hmm.
Now, what happened to change attitudes today?
Well, I think probably still the drought more than anything out there, but something that we're looking at very interesting with last week's USDA information and what we saw. July went off the board. July corn went a nickel under $7 this past week. Next year, we're already looking at 2 million acres shy of this year, an equal number of bushels per acre with the USDA, and a potential for maybe 2 to 3% more unharvested acres that'll go into silage. Imagine what corn's going to be this time next year. So that $2 break that we just got, we're looking as an opportunity here in this drought area to look at owning some corn here.
I have a question for you that was kind of bothering me over the weekend, but we're talking about the crop condition numbers. We're going to get a new crop condition update later on today. So we've heard about all these destroyed acres on corn in parts of, I guess you can run them off. You got Kentucky, you got Missouri, you got Kansas, Oklahoma, maybe parts of southwest Iowa, I understand. And a lot of it is just gone in western Nebraska and western Kansas. So when they do crop condition ratings moving forward, what do they do with the acres that are gone?
That'll be very interesting.
Do they count those as a zero, or do they just ignore them and rate the quality of what's left in the field?
I do not know.
That would raise the ratings, wouldn't it?
It seems like it would, yes. But I don't know. I don't know. Because I would assume that while it's still in the ground, it would then just go to the very poor to poor category. So maybe instead of where it's, if it has not been harvested yet, which there's been some silage cut, but not a great deal as far as the total amount of it. But I would say that more likely than not that those numbers just fall into the lower categories of very poor to poor.
I just wonder if they don't fall off the chart altogether.
And it could. I honestly don't know. But that's a great, I'll look into that when I get back to the office.
I'm very curious, and maybe some of our viewers might want to weigh in on that if they would know the answer to that. But, you know, do they count as zero if they've been
that's interesting. I don't know, but I can find out. I know somebody to call to find that out.
Because that's if you just take them out of the equation, that's going to make your entire average go up.
Absolutely.
As you go, and that doesn't seem right. But anyway, we'll find out. Anyway, we'll take a break right here, and then we'll come back and we'll talk more with Chris Swift right after this. We're back talking with Chris Swift of Swift Trading. He's based in Nashville. Now let's look at our livestock trade. We'll begin with live cattle. On the futures trade today, a little bit of a surprise perhaps in the fact that we have sharp gains in the grain markets and we have gains in the live cattle too, led by the August contract, the nearby contract. It's 95 cents higher. We're at 135.87. October up 67 now at 140.22. Now, it's a little different story, of course, when you get to the feeders because they have the feed input costs to have to contend with, but All things considered, Chris, I mean, look at that. It's hanging in there narrowly mixed today. August 20 cents higher at 176.55. September down 22 at 179.45, and on it goes, just kind of narrowly mixed on further out. So kind of impressive that it's holding its own so far. Lean hogs are showing big gains today. August lean hogs up $2.50 at 112.32. October up $2.12 at 94.72. All the other deferred months are not quite $2 higher, but big moves there. Talk to me about this feeder cattle market and the live cattle trade. Live cattle are higher. Is this weather related? What's prompting that?
I'm not real sure, because we saw the elevated cow slaughter, and I posed the question on Friday, said if the packer does facilitate the amount of kill necessary to be able to alleviate some of the pressure off the cow market, that flood the market with beef. If he doesn't, he starts to back cattle up. So we're not real sure, and I'm not real sure today's board movement right here is going to be depicted of either one, but it just looks like we've got more beef coming right now, and in the future it'll make for a great big hole, but right now they've got plenty to fill that hole.
What is the status? You and I were talking in the hallway right before we came on live here about the auction markets out there in the country, and you said things are really kind of getting kind of wild out there.
They are long lines trying to get into some slaughterhouses down there, or even just to the sale barn where they can get rid of them, because they're out of water. It's very reminiscent of the 2011, 2012 drought, where it was pure liquidation only. Every day that goes by, you just have to liquidate more.
Where is it happening?
It's central to North Texas, into Oklahoma, some parts of southern Kansas, anywhere where that drought's the most significant. But it's right in that area from North Texas all the way into central Kansas.
Okay, well, it's a story that does bear watching, and as Tim Ross was saying, just horrific heat headed for the plains this week. It could be especially hot maybe tomorrow. So we're thinking about everybody out there. Hopefully you can keep that livestock safe. We've already lost too many this year, but take all the precautions you can out there, and we'll be thinking about everybody. So that's a look at our livestock trade with Chris Swift of Swift Trading. Janet, I'll turn it back to you.